Greetings, my dear student. This is Balakrishnan again from BALAS Accountancy Special Classes. Welcome to my 39th episode. In my last episode, that is episode number 38, I have started with a new chapter, Accounts from Incomplete Records, which is otherwise called Single Entry System. Two more practical sums I'm taking up in this episode. So, as usual, let me switch over to my sharing section. Thank you. Well, students, first question of the day. Question number 32, page number 23.57, DK Goel, edition year 2019. Well, it's as follows. A retail trader has not kept proper books of accounts. Ascertain his profit or loss for the year ending 31st March 2017 and prepare a final statement of affairs from the following information. So, opening statement information as well as closing statement information has been given. Assets and liabilities. Cash balance, bank balance, stocks, under debtors, under creditors. Loan from X, opening nothing, closing 10,000. Bill receivable, opening 4,000, closing nothing. Fixed assets also. Okay, 40,000 worth of fixed assets at the year end. 60,000. He withdrew from the business rupees 1,500 per month personal use and rupees 8,000 for giving a personal loan to his brother. Both are drawings. He also used a house for his personal purposes, the rent of which at the rate of rupees 900 per month and electricity charges at an average rate of rupees 250 per month were paid from the business account. Yes, again, drawings. Any removal from the business for personal purpose will be considered as drawings. Next, he received a lottery prize rupees 25,000, out of which he invested half the amount in business. To the extent he invested only, we are concerned, that is additional capital. Again, he has not paid 2 months' salary to his clerk at rate of rupees 1,200 per month, but insurance premium at rate of rupees 600 per annum was paid on 1st October 2016 to run for 1 year. Okay, next. Loan from X was taken on 1st July 2016, on which interest was unpaid at rate of 18% per annum. Fixed assets are to be depreciated at rate of 10% per annum. So these are all expenditures and income to be adjusted for arriving at the net profit. Well, they have given the answer hints also. Let me switch over to preparation of statement of affairs. This is the opening statement of affairs. Same figures have been listed down there suitably. Okay. Similarly, these closing figures also has been taken into account for the purpose of preparing the statement of affairs as the 31st March 2017. Closing. Okay. We find balancing this one, we get a capital opening 80 to 200. Similarly, for closing, we get a capital of 1,02,000. Let us check it. Yes, 80 to 200, 1,02,000. Okay. Well, the third step, preparation of statement of profit or loss. Closing capital, we have just arrived at as 1,02,000. Okay. Then drawings, what they have mentioned about drawings, 3 components are there. House rent 1,500 into 12, personally as used. Similarly, personal payment is better 8,000, and at another personal thing 900 plus 250. These are all personal things only. Monthly 1,150 into 12. Okay. So that we are taking up here. Drawings, cash drawings, 18,000. Personal loan to brother, 8,000. House rent and electricity charges, 900 plus 250 for 1 year. So everything together comes 39,800. So now the total is 1,41,800. Less fresh capital introduced. They are told here now. He had received a lottery prize of rupees 25,000, out of which he invested half the amount in business. Whatever he has invested in business only, we want to consider. Okay, that is 12,500, right? So that has been reduced. Now 1,29,300. Less opening capital. Fine. We have found out the opening capital already as 82,200. Now my profit before adjustment is this minus this 47,100. Let me take up those non-cash expenditures. Salary payable. 2 months salary to his clerk at rate of 1,200. Okay. Hence 2,400. Now interest on loan accrued. We find that loan amount was 10,000 and they have told us loan from X was taken on 1st July 2016 on which interest was unpaid at rate of 18% per annum. Hence, 10,000 into 18 by 100 into 9 by 12. Why? April, May, June was not in the picture. Remaining 9 months. It was out to be 1,350. Right. Next one. Fixed assets are to be depreciated at 10% per annum. So on the closing balance, we are taken. We need not necessarily take it. We can take even in the opening balance also, or the difference, that is 40,000 has become 60,000, the 20,000 half year depreciation you can take. Well, I have just tuned the this answer, and we can always give an assumption note. We will consider that the additional machine has been purchased on the first day of the year. Hence, the entire 60,000 is chargeable at this rate. When they say 10% per annum means, in fact, we have got a lot of options. Well, forget about it. So 10% of 60,000, 6,000. If we add up everything, 9,750. And let us reduce this expenditure from the previous total. It will be now 37,350. And there is another income to be adjusted, prepaid insurance. What they have mentioned about it? Insurance premium at rate of ₹600 per annum was paid on 1st October 2016 to run for 1 year. So 1st October 2016 to 30th September 2017. That means April to September, 6 months, or half of the 600 will be prepaid. That has been taken here. If I add it back, I'll get 37,650. Well, that is the answer given here also. Now, let me move to the final step. What is that? Practically balance sheet or a final statement of affairs. Okay? So, the last step, the fourth step, that is nothing but preparation of final statement of affairs. It is exactly like a balance sheet as is prepared in case of a double entry method. Okay? So, as I say, cash, stock, sundry debtors, unchanged figures. Well, you keep it in mind, when you prepare this final statement of affairs, you have to base on step number 2 and step number 3. Step number 2 is what? Closing statement of affairs. Step number 3 is what? Preparation of statement of profit or loss, right? So this one, these 3 information I am getting from my statement of affairs closing. As it is, I am showing. And fixed assets, since there is an adjustment that is reflected here, I am taking that one and net figure I have shown there. Okay. Now, let us move to the liability side. Bank overdraft 15,000. Well, students, I've been teaching you from the scratch. So you can go back to my first episode, second episode, like that also. What I mean to say, a credit bank balance by this time, it should strike you very fast. It's an overdraft. Okay? So I'm showing that one as bank overdraft. Sundry creditors, as it is, I'm showing here 8,000, right? And loan from X 10,000. Of course, interest added again from statement of profit 1,350. So this is the latest liability. Outstanding salary 2,400. Again from here 2,400. Now, as I had mentioned in my last episode, capital will be prepared in the conventional way, as is done in case of a double entry system of accounting. Starting with opening capital 82,200. Yeah. Then add net profit 37,650. Yes. Add fresh capital, introduce 12,500. That also we can get from this profit or loss. Is it no? 12,500. Fine. Thereafter, drawings again available in our statement of profit or loss. So total is how much? 39,800. Okay. So that is taken here. So final capital after all this adjustment. Now 92,550 we will be showing at the outer column. Calculation being opening capital 82,200, add net profit, add fresh capital introduced, less drawings. Okay. That being the case, the total of our balance sheet is 1,29,300 each. That we are verifying here. Yes. So that's all. I hope I have fully explained to each and every element of this sum. Okay. Well, students, second question of the day. And this is a special question. I would request you to kindly write down the question, since you may not be able to locate the source of this question. Unless the question is readily available with you, it won't be that effective. My classes won't be that effective. Okay. Well, this is the question all about. Mr. X could not keep complete records. He furnishes you the following information for the year 2021-22. Assets and liabilities, beginning of the year as well as the end of the year have been given to you. Okay. Bank balance, credit means, it's a negative balance or overdraft. Bank balance to be positive, we should have a debit balance. Okay. Over. Now, information, additional information. He sold his private investments, rupees 4,000 at 25% premium and brought this money into his business. That means additional capital, 125% of 4,000. His drawings are rupees 1,000 per month. That means annually 12,000. Stock costing rupees 3,000 was taken by Mr. X for his special use, that to his drawing. Now these are the adjustment. Okay, provision for 10% is required for doubtful debts, and depreciation at rate of 5% per annum is to be written off for furniture and fixtures and buildings. Rupees 6,000 is outstanding for wages. Rupees 2,400 for salaries. Prepaid insurance amounted to rupees 400. Outstanding legal expenses rupees 1,400. From the above particulars, find out by statement of affairs method the profit or loss made by X during 2021-22. Also prepare his balance sheet as at 31st March 2022. Answer hints to have been given. Okay. Now let us move to the preparation of both the statement of affairs. This is the opening statement of affairs. I had just reflected the these figures suitably assets and liabilities there. Similarly, these have been listed down under closed statement of affairs. Okay. Difference here, we find 83,300, our opening capital. Here also, closing capital 1,04,940. That's all. Now, let us move to our statement of profit or loss. Closing capital, yes, we have arrived at here. That has been taken here. Drawings already explained, na? So two drawings are there. So 12,000 and 3,000, 15,000. Additional capital, 125% of 4,000, 5,000. He sold something and I think that's all immaterial. How much he brought? What is the value you are attributing? That much you realize and you have introduced that event, right? Less opening capital. Yes, opening capital has been given here very much 83,300. Fine. Yes. So, and profit before adjustment is this one. And it is subject to all adjustment. Provision for doubtful debts. 10% of 28,000. Depreciation on furniture, 1,200, 5%. Depreciation on building, 24,000, 5%. All these have been categorically given. I presume you have the question with you, so you will be very comfortable, right? Now, if I reduce this 13,860, that is a sum of these adjustments, I get 17,780. There is yet another adjustment, prepaid insurance 400. They are categorically told that prepaid insurance amounted to rupees 400. Okay. So that also we are adding back. So 18,180 is our profit. Okay. Now let us prepare the final statement of affairs. In preparing the final statement of affairs, as I told you in my last episode, based on the closing statement of affairs and also based on your statement of profit or loss, and prepare it well. Stock in trade, no adjustments. Sundry debtors, I find there is adjustment in my statement of profit and loss. Yes, similarly. So net amount I'm showing, bill receivable as it is, prepaid expenses 400. Yes, it is reflected here 400 rupees. Yes, that is shown there. Furniture and fixture subject to depreciation, building subject to depreciation. Total come this side 1,06,340. Sundry creditors as it is, bills payable as it is, bank overdraft 1,660. Why I call it bank overdraft means they have told here 1,660 credit balance. Okay. Outstanding expenses categorically given. These are all available in your statement of profit and loss account. Okay. Yes. And capital conventionally. Opening capital was, how much was the opening capital? 83,300. Okay. Profit, how much we arrived at the profit? 18,180. Add it. Add additional capital. Yes, it is available very much. Yes, additional capital is 5,000 and drawings also 15,000. These are all we will adjust here. Okay. Minus drawings. So 91,480 is the latest capital. And both the sides tallied. Okay. So that's all. These two sums, whatever I given is very simple sum for practice purpose. Okay. At least you have got the basic idea how to go about in a statement of affairs method, or which is otherwise called network method of single entry system. Thank you. Well, students, so we have worked out two sums. Single entry method, which is otherwise called accounts from incomplete records. And under that, there are two methods. One is statement of affairs method or network method. That's what we have dealt in so far. Okay. There is yet another method. That is conversion method. That I will be taking up in my very next episode. Till then, take care of yourself. See you. Thank you.